CVS Pharmacy will be closing 900 stores all over the country over the next 3 years.
David's Bridal is declaring bankruptcy just days after laying off more than 9,000 employees.
Gap in downtown San Luis Obispo is closing its doors. The shop is promoting store-wide sales of up to 50%. Furniture and other equipment from the store also being sold.
Announcing it plans to close 20% of its brick-and-mortar Disney store locations before the end of the year. At least 60 of its North American locations will close.
Starbucks will close stores, though it's only 16 locations in regions like Los Angeles, Seattle, Portland, and Washington, D.C.
The retail sector is in crisis, with even established brands falling apart in the toughest economic environment since the 1970s. Consumers will lose their favorite stores this year as retailers are grappling with declining sales, inflation, and huge debt burdens. But which stores are in big trouble now, and why is this happening to them? In this eye-opening video, we'll be highlighting 20 retailers who are collapsing right in front of your eyes. From the factories that led to their downfall to the lessons we can learn from their mistakes, this is a deep dive into the retail industry's most notable failures. So let's start with Disney, the renowned film production conglomerate, which is currently undergoing a significant restructuring plan, with former CEO Bob Iger being reinstated. Due to the pandemic and inflationary pressures, the company's stock has plummeted almost 40% this year. Disney has closed over 60 stores in 2021 and experienced a $1.5 billion loss in its streaming business in Q4. With consumer discretionary spending reduced in 2022, an additional 59 stores are set to close, leaving only 23 Disney stores in the U.S. as the company shifts focus to digital platforms and social media. Even though McDonald's, the well-known fast food giant, is not likely to go out of business anytime soon, the current economic downturn has had an impact on it. The brand has discreetly been closing numerous underperforming locations due to rising costs stemming from the implementation of new health and safety regulations in response to the pandemic, in addition to higher food prices that have eroded profits. According to the Wall Street Journal, McDonald's is currently experiencing its lowest profits in 13 years. In response, the company has opted for a cautious approach, closing 200 low-volume outlets at Walmart while maintaining only 150 across the country. Kohls, a former retail giant, has faced ongoing struggles amidst industry shifts and fierce competition from larger chains. The company is refocused on athleisure and denim clothing after exiting the department store sector. But insider data indicates declining retail sales over the past 7 months. With thin margins and decreased consumer spending, Kohls has been added to Moody's Analytics bankruptcy watch list for 2023. Gymboree, a children's clothing retailer, is facing severe financial difficulties due to declining foot traffic, increased competition, and cash flow problems. After filing for bankruptcy, the company abruptly closed 450 stores and laid off hundreds of employees, leading to a multi-million-dollar class action lawsuit from former employees. Moody's has downgraded Gymboree to negative, marking a major setback for the already struggling brand. Starbucks, a leading global coffee chain, has not been immune to the ongoing turmoil in the retail industry. The company has encountered significant challenges due to shortages of essential ingredients, packaging, and staff, prompting it to cut costs to withstand the brewing storm in the sector. In response, Starbucks is closing 500 locations. It's possible that your local store may be included in the list. Despite its prominent position in the industry, Starbucks has faced mounting difficulties as the retail landscape continues to evolve. The popular fashion brand Gap's poor financial performance during the holiday season was exacerbated by controversies surrounding rapper Kanye West. Despite the successful launch of Yeezy Gap, sales plummeted due to the perception that Gap's clothing were overpriced and plain compared to fast fashion and luxury brands. To address these challenges, Gap will close 220 underperforming stores by 2023 and focus on a more efficient model aimed at boosting productivity and achieving sustainable growth in the long term. Christopher & Banks, the women's clothing store, has filed for bankruptcy due to financial pressure of the pandemic. Over 400 stores are closing across America, and out-of-business sales are ongoing. CEO Carrie Jones attributed the decision to seek protection to the pandemic's impact, and the closure of stores marks the end of an era for loyal customers. David's Bridal, a wedding retail chain, has filed for bankruptcy and plans to lay off 82% of its staff. The company has been experiencing financial difficulties for months, and this is its second bankruptcy filing in 5 years. If a buyer is not found soon, CEO James Markham has stated that all stores may close by the end of the year. H&M, the global fashion giant, is facing a daunting future with a series of financial setbacks. Despite the end of the pandemic, the company continues to grapple with losses, leading to the closure of more than 320 stores worldwide. Furthermore, H&M's profits have taken a significant hit, causing the company to announce job losses of over 1,500 positions, according to CNBC. As the fast fashion industry's pressures continue to mount, H&M's latest struggles highlight the uncertain future that lies ahead for one of the world's biggest fashion brands. GameStop, the world's largest gaming retailer, has been facing a tough time in the retail industry, with falling revenue and negative sales growth. Despite its momentary rise in the stock market last year, the company has been shedding hundreds of stores over the last 2 years, closing a total of 1,000 locations in 2021. To keep up with the changing retail landscape, GameStop is switching its focus to online operations, leading to the closure of 557 more stores currently conducting clearance sales. Morphe Cosmetics, known for its strong social media presence and cult following, is closing all of its stores in the U.S. due to several lawsuits filed against the company, including one for failing to pay rent. Its parent company, Forma Brands, has also filed for bankruptcy. The move marks the end of an era for the beauty brand, which gained popularity through influencer collaborations and social media marketing. True Religion, the LA-based premium denim brand, has struggled with declining sales amid the growing popularity of athleisure wear, leading to 2 bankruptcies in 2017 and 2020. The company has closed 64 stores, but demand for its apparel continues to decline, casting doubt on its future and signaling the possibility of a third bankruptcy filing. Chipotle, the fast casual dining chain, has permanently closed 65 restaurants due to declining sales, supply chain disruptions, and labor problems. Lori Shallow, the chief corporate affairs officer, cited staffing challenges as a major factor in the decision, as the company has struggled to hire new staff and retain managers. No clear solution is in sight, leading to the difficult decision to shut down these locations indefinitely. Best Buy, the electronics retailer, is quietly closing stores due to declining foot traffic and online sales pressure. In 2021, it announced plans to close more stores due to supply chain and labor shortages. Retail experts predict that Best Buy's focus on online sales may lead to its disappearance from the U.S. retail landscape by mid-2024. Joann, the crafting retailer that benefited from pandemic lockdowns, is struggling post-COVID. In Q4 2022, sales declined 6.8%, gross profit by 20%, and debt rose to $21.5 million. The company is closing stores and laying off workers to reduce costs, but its plan to invest in digital transformation and omni-channel capabilities to adapt to changing customer preferences. Walgreens, the American pharmacy chain, is grappling with supply chain disruptions and medication shortages, leading to diminishing sales and stockouts. It has quietly closed 4 underperforming stores and plans to shutter over 200 more as part of its long-term strategy to control expenses. L'Occitane, the renowned French beauty retailer, has experienced a steep 56.5% drop in in-store sales during the busiest shopping season of 2021. As a result, the company's recent earnings fell short of investors' expectations, prompting its leadership team to implement a new restructuring plan aimed at emerging from Chapter 11 bankruptcy protection. This strategy includes the closure of 23 of its 166 stores throughout the U.S. and a reduction of its brick-and-mortar footprint to 133 locations in 2023. Tops, the northeastern U.S. supermarket chain with 180 locations, is struggling under bankruptcy protection, burdened with debt and an unsustainable business model due to $375 million in dividends. Analysts speculate about its disappearance from the economic landscape, as the lack of interest from potential buyers suggests a dire future for the already struggling company. CVS, the healthcare and retail company, is closing 10% of its brick-and-mortar stores due to issues such as bad lighting, messy merchandising, and a weak product assortment. Closures will allow for investment in the remaining stores and strengthen the company's digital presence. CVS has been shutting down stores in Virginia, California, and Tennessee as part of a new strategy to align with evolving customer needs. Tom's Shoes, the socially responsible footwear brand, has been facing increasing pressure with rising prices and declining sales. To manage debt, Tom stopped shoe donations and began contributing a percentage of profits to charity. The brand's debt rating was downgraded last summer, and analysts speculate that this summer could be Tom's last. Now, we want to hear from you. Which retailer's decline was the most surprising to you? Are there any other struggling retailers that we didn't cover in this video? Let us know in the comments below. And if you want to stay up to date on the latest retail news and trends, be sure to subscribe to our channel and hit the notification bell so you don't miss any of our future videos. Thanks for watching, and we'll see you at the next one.